Hi everyone, it is Tuesday, December 29th, sometime in the morning, and it is a very light holiday week, as you all know. Amazon up big today, and you can see it's a breakout from a recent range. A little disappointing to me since I thought that these leading FANG stocks, the high flyers for the last couple months, were getting tired. Obviously, Amazon is having its own say about that. The reason I have this up here is I want to talk about tech, big versus little. The market looks good today, or does it? It's narrow leadership. I wrote that up earlier this week, that it's deceiving, and the average stock, the average tech stock, is not doing nearly as well as what we see here. Let's take a look at the SPDR Tech ETF, and unfortunately we have this mini flash crash last August that's really messing with the charts, and I'm going to zoom in a little bit here, and even better, let's get rid of it by putting it into a line format. So there you go. The tech ETF, new highs here above the previous high over the summer, did not get below the lows of the summer, unlike the market, and it's pretty easy to see when we compare to the S&P 500. We'll use the ETF just because it's easier to type, and you can see as we play with it, it is a relative chart, so when you play with the spans it changes. You can see in the red here the SPDR, the SPY, not near its old highs and took out its summer lows. Tech ETF looking much better relative to the broad market. I'm going to get rid of that. Oops. And now we're going to switch over to the small cap index, which is the old PSE index, now called the New York Stock Exchange ARCA High Tech Index, High Tech 100. It's not weighted, so stocks like Amazon or Google or the other big names are not going to skew this thing, and you can see that. Just check this out. The summertime lows barely got back to that, let alone the old highs. Clearly underperforming. It's under its 200-day average, whereas the XLK was above its 200-day average. And we can compare that to the S&P again. Might as well just do it. Pick a color that you can see, and you know, it's kind of hard to demonstrate my point there. The S&P is in red, and it is above the equal weighted high tech index. And now what we're going to do is we're going to compare the big cap directly to the small cap with a relative chart here. And I'm going to have to get rid of that moving average in a sec. And it was thinking, and there we go. I'm going to get rid of this average. Actually, what I'm going to do is change it to a 50-day average. And we'll talk about that in a second. So here you have, in the short term, you know, it's we're only talking since the summertime now. You can see clearly that the big cap tech was outperforming the regular or average tech stock, and that has changed. You can argue that this trend line is broken. The 50-day average of the ratio is broken to the downside. Been quite a change over the last couple of days. And I wrote that the XLK itself was underperforming the S&P over the last 3 weeks, even though it has been outperforming over a couple of months. So this is a change. This is telling me that leadership and the big cap is a little problematic right now. I know Amazon's up today, and some of the other stocks, let's take a look, that are in these generals, the FANGs, as they call them, Facebook, Amazon, Netflix, and Google. You can see that's doing well, but you know, it's been really underperforming over the last couple of weeks. And if we look at Netflix, for sure, you know, that's way down off of a failed breakout, and we can just put that back into bar format. And you can see it's a failed breakout. It's coming back down, and it's been a rough couple of weeks for Netflix. So anyway, the bottom line is that big tech has lost some of its luster. I know it's up today nicely, but you know, it's a holiday week. Volume is light all around. But overall, I think one more engine of the market is sputtering, and that is probably not a good thing going into the new year.